trade that was taken today, as well as a potential setup that actually would have been validated, but we didn't take or act upon this. So first things first, we go over the trade recap for the first trade, which you can see through here. If you go to the lower time frame, it's a bit more obvious. The trade outcome is still a 1 to 2 risk to reward ratio. It ticks all the boxes. You had the current range. We understood price action. If you are tilted towards the bullish area, you will get a push up as you re-break the highs to pop up towards 4406 and challenge the daily highs, and then give you more acceleration towards the upside. The reason why we developed the bias of a more bullish day is because of the way the 4-hour candle already formed. The 4-hour candle grabbed the bottom wick yesterday. As it started to push up, you're expecting price to either push all the way up or give you a stronger rejection. And today it wasn't so clear to me whether it is going to be a continuation all the way up. However, price action on the lower time frame didn't really tell you too much. In previous situations, you've had price give you consolidation and continuation, which is what the data shows for me to continue the wave up. Price action didn't do that. You've given us bearish indication, that's fine, but again, when you look towards the left of the screen, the data tells you you can receive some form of consolidation. So you're still expecting a liquidity grab with a bullish bias to continue the buys up. So for me, that's the way I was acting today. The bias was buys, and that's exactly what I executed on. Today could not have gone any better, could not have gone any worse. We are still working out where the best placement for risk off areas are, where I can move stop loss to break even. The market is shifting. The price behavior in the market now is very peculiar, and it's something I can't quite grab an edge on, right? Right now, when you're looking at the strategy, it looks okay. I think that we're still in the right area, and we're still going to get good trades. It's just that for the past 2 weeks, for the past week that I've traded properly, you don't really get too many of these fantastic opportunities. So trying to adapt to find really good opportunities and taking advantage of everything is the next step, but it's one that we're actively trying to seek every single day. Like today, yes, could you have taken sales? Most definitely you could have, but look how many times prices fade you out. You've grabbed liquidity, price is trying to push up, you've closed back above, you're still within this liquidity area range. So there's no clear picture for me to take sells or buys. Price action still rejecting but didn't give you a closure below. To me, this doesn't look like something that I would take. It doesn't make any sense. So since there is no price narrative on the daily for me, I don't know if it's bullish or bearish. It's very indecisive and it's not very clear. If you go through the first and the second trade, or the first trade that we've taken with the break-even outcome, you've had the current range because you've established where price is. You've got the liquidity area, which is the nearest zone here. When you get the retest, price action comes up, it pushes you back down. You're looking for an entry. Price did that on the lower time frames, no problem. You've got the narrative. The current 4-hour candle came back down. It gave you and satisfied a break of the current 4-hour candle lows. So when price action pushes you back up, you're looking for the narrative. 15-minute time frame gave you a fantastic entry, which was right here. It gave you a bearish hammer, which tells me price action should actually, it's called an inverse doji, I think, should continue to pop up. Now, on this candle, we took the flip of the 15 high. We're expecting the body of the candle to close above the previous wick high, which unfortunately it didn't, so therefore it's hindered the probability and chances of us getting that full take profit. But we're already looking and establishing your risk off areas breaking the highs. You've got resistance here, you've got the small range. If price action gives you characteristics to break above, then you're already moving stops to break even, which you have because you're utilizing the knowledge that price action will utilize the momentum to the upside. If it really wants to break out, it should break this level, and there should be no logical reasoning for price action to come back down to then shoot you back up to grab more liquidity. If it does, then you'll be stopped out of this trade and you'll be re-evaluating for a new opportunity when price action comes down to give you liquidity, because you require a whole new set of things, a whole new set of requirements, which is going back to the current range, back to the liquidity areas, back to mirror, back to narrative, and back to the breaker lows and highs. So this first trade made a lot of sense. We took it, break-even outcome, peaked 50 ticks, that's about it. Now, coming to the second trade, we understood price action is bottoming out. You're looking at break of the current hour candle highs. This would have been a validated trade. price action was very hindered in this particular area. However, you got break of the lows, price action starts pushing you up, you're expecting price to shoot up, break even area at the same sort of areas with resistance. And as you can see, we wouldn't really have fared so well in this particular scenario. This trial trade, I wrote this so I don't change my opinion on it. We don't have a fixed risk off point. So we base price point characteristic. If price is doing this, if you've already been given some form of bearish confirmation price action should shoot down, you'll be looking to move stops to break even. For example, here, the 15's given you rejection. You're looking at setting stops to break even. Otherwise, you would have come out with a negative 100 pip stops. Not the end of the world, but we're just trying to experiment yet again. This outcome for the range is definitely something that we looked at this morning. However, if you look to the left of the screen, you don't have any prior data that tells you it should push you down. So it will not go in tandem with my current range liquidity area mirror narrative. If you don't have the mirror and you don't have the narrative, it doesn't make any sense. And to me, even you have the narrative, you don't have a mirror. Unless it's here, you don't have liquidity grabbing to the upside. So for me, it doesn't validate a sell. To me, in my mind, you utilize momentum on the daily time frame. The daily time frame is very bullish. The 4-hour time frame gave you support. And it wasn't until this 4-hour candle gave you the closure, you would be validated for sells. And obviously, by then, it's 6 p.m., late session. I'm not interested in those trades because I'm off the charts. That about wraps it up. That was today's session. In terms of the skill set building, we aren't changing anything in the methodology and the skill sets and the strategy. Everything remains the same. You're doing a 4+1 checklist. You're validating. You're sticking to the plan. And as long as you have that plan ready to be executed without any hesitation, you have all the scenarios set out. When you're in the trade, what do you do? Or even before the trade, what qualifies for the trade? What are your requirements to tell you you're activated into a buy stop, if it's validated market entry? And then from there, you'll be looking at your set TP, your set stop loss, your entry point. Where's your break-even level? So when you go break-even, your only two outcomes is going to be take profit or break-even. You don't manage to trade. You've done what you need to do as a trader. Your job is done. You wait for price to do its thing and let it run or come all the way down to your stop loss. That is completely fine. That's about it. We wrap it up for Tuesday. Coming back tomorrow for Wednesday's trading session. Hopefully we can get something a bit better than this and cleaner price action. You've got a big fat range. We can utilize that to our advantage if we can get a very good daily confluence and a good daily bias